All right, straight to all the action on the last read, where markets ended with cuts of about 0.5% to end the week with cuts of 1%. The Nifty gave up the 10,800 mark to end below the 200-day moving average, and the Sensex managed to hold on to that 36,000 level. Among the broader markets, banks slipped 300 points from the day's high to end with cuts of 0.5%, led by ICICI Bank. Mid-caps also tumbled in trade today, and that index shed more than 1.5%. The top story that we're tracking this evening: the Supreme Court has upheld the Insolvency and Bankruptcy Code in its entirety and also its constitutional validity. While dismissing a batch of petitions challenging the IBC, the top court refused to allow pleas for parity between operational creditors and financial creditors. A batch of 10 petitions, remember, had challenged various provisions of the IBC, including the timelines, the thresholds, the jurisdiction of NCLAT itself. Now, the court has disposed all the contentions, raising questions on the validity of Section 29A, which bars defaulting promoters for bidding from their company. It also upheld its retrospective application, which also had been challenged by some of the petitioners. It did, however, give an important clarification on the related party clause, where it said that only those persons that are connected to the business activity would fall under this criteria, and not a person who is related by family ties, for instance. Another key point of contention was the treatment of different classes of creditors, where petitioners had sought parity between financial and operational creditors. Here, the Supreme Court rejected the plea, saying that it found the classification between financial and operational creditors neither discriminatory, nor arbitrary, nor violative of Article 14 of the Constitution. It also upheld Section 12A of the IBC, which allows for withdrawal of insolvency proceedings by consent of 90% of the creditors, and concluded the order with an epilogue where it said that the experiment conducted in enacting the code, judged by the generality of its provisions and not by the so-called crudities and inequities pointed out by the petitioners, is proving to be largely successful, and signed off that order, saying, and I quote here, "The defaulter's paradise is lost, and in its place the economy's rightful position has been regained." Now, we spoke to several experts. Leading bankruptcy law expert Behram Vakil welcomed the Supreme Court judgment, and we also spoke to VG Kannan, the chief executive of the Indian Banks Association, who said that the judgment was pleasing to his ears. Listen in.
I think it's a really important decision for our banking sector, for the country itself, and I can't be more delighted. The architecture of the statute itself has been upheld. The language of the statute has been upheld. The waterfall where the creditors come first, except for the carve-outs for workmen and the costs of the IBC, etc. So I think in general, that's a huge plus factor. And again, this operational creditor issue had been muddied by Binani, and I'm very glad that the court has, clarified that as well, because it was creating chaos and huge amount of delay.
For a long time, we had this process which actually gave teeth to the bankers to take action, and the lenders. And I'm very happy about this, and I think it sort of quashes any kind of expectations saying that the IBC will be thrown out. And I'm very happy that the entire, as the wording says, the upholds insolvency code in entirety is very pleasing to the ears.
All right, in some stock-specific action then, DLF tanked in trade today. This after the CBI filed a fresh case against former Haryana Chief Minister Bhupinder Singh Hooda and others in connection with alleged irregularities in land allotment in Gurugram. The CBI also conducted searches across multiple locations, including DLF's offices. Parikshit Luthra, who has been tracking all of these developments, joins us with the latest. Parikshit, fill us in.
Right, so 14 is the number in the list, and DLF, Gurgaon Homes Private Limited, has been mentioned in that FIR. There are a number of other accused, including Bhupinder Singh Hooda, the former Chief Minister of Haryana, also the former Chief Administrator of Haryana Urban Development Authority. What the CBI has gone on to say in this FIR, that the applications of DLF and other companies were incomplete, there were deviations, there were deficiencies, and therefore these applications should not have been processed, they should not have been concluded. Therefore, it has concluded that TC Gupta, who was the IS officer heading the Haryana Urban Development Authority at that time, and BS Hooda, fraudulently approved applications of all those companies, despite the fact that their applications were incomplete, did not meet the criteria, and therefore a case of criminal conspiracy, cheating and under Prevention of Corruption Act must be registered against all these 18 entities. The Congress has called this vendetta. We're waiting to see what happens next. It's quite possible that top officials of these companies, even the Haryana Chief Minister, IS Officer T.C. Gupta, they may be called for further interrogation. So we'll have to see what happens in this case next.
All right, Pariksha, thank you very much for joining in and filling us in with all that update on DLF. Now, staying with some stock-specific action then, SL Group stocks, including Zee Entertainment, Dish TV, Zee Media and Zee Learn, plunged in trade today. This after a report by The Wire showed that the SFIO is probing SL Group's links to a company which deposited 3,000 crore rupees just after demonetization. Mangalam joins us now with more details on this. Mangalam, the stocks have taken quite a beating on the back of that report. Can you give us some context?
There was a sharp sell-off in all the SL Group stocks today, be it the bigger ones like Zee and Dish TV losing almost 30%, or the smaller ones like Zee Learn, Zee Media, as well as City Networks. So what exactly set the cat among the pigeons was this report coming in from The Wire on the SFIO probing Nityank Infra for deposit of 3,000 crore rupees made right after demonetization in December 2016. Now, The Wire says that Nityank Infra carried out some financial transactions with companies which are associated with the SL Group between 2015 and 2017. So that is what scared the street. Furthermore, The Wire also says Nityank went ahead to help in a deal between the Videocon Group as well as the SL Group between in November 2016. Now, the SL Group on its part says that Nityank is an independent firm, while Videocon alleges otherwise. The SFIO's probing hasn't concluded, nor has the SFIO taken any action in the time since the probe has begun. But the fear in the street was further exacerbated by the fact that all the Zee Group stocks or all the SL Group stocks, the promoter's stake is pledged to a fair amount, be it Zee Entertainment Enterprises, where the promoter's stake is pledged to the tune of 60%, all the other companies like Zee Learn, Zee Media, City Networks, as well as Dish, where the promoter's stake ranges anywhere between 80 to 95% itself. So the fear is that once the stock prices started falling beyond a certain level, it was the pledged shares which were being sold in the markets openly, and which is what caused the massive dent in these stock prices. CNBC TV 18 has written a detailed letter to the management of Zee, and we've tried to reach out to them via multiple modes of communication. We are awaiting their response, but a sharp knockoff in all the group companies in today's trading session.
All right, Mangalam, thank you very much for joining in. We'll leave it at that, but time to take a short break on the show. Coming up next, Maruti Suzuki's skids in the third quarter, a complete analysis of their results when we return. Straight to some breaking news then. L&T has just reported its third quarter numbers, and they're flashing on your screen as we speak. The consolidated revenue and the secured orders worth 42,233 crores at a group level. To analyze all of these numbers, I have with me Sonia. Sonia, firstly, are they in line or are they below estimates?
Okay, so the revenue number looks better than street estimates for sure. The expectation was a 32,000 to 850 crore number on the top line, but it's come in much better than that. That's the net profit number, 2,040 crores. That as well is higher than the estimates of 1,830 crores. But I think, okay, 35,709 crores is the top line number. This compares to 32,850 crores, which was the poll. So it is much better than what the poll has thrown up on the top line. And even if you compare it to what they did same time last year, it is a growth of almost about 24% on the top line. It's definitely something that the street will like. But you know, Ritu, the number that everyone is keenly watching out for is the Q3 orders, and 42,233 crores at a group level is a very good number. The street will take it well. I'll tell you why. The expectation was that the order inflow will slow down in Q3 to about 30 to 35,000 odd crores. Now, same time last year, they did about, same time last year in the quarter, they did 48,000 crores of orders. This time it slowed down, but not as much as the street was fearing. So it's definitely something that the street will like. The EBITDA margins are stable, so no problems there. And the profits as well, I think I saw the profits were better than what the street was estimating. So these are a good set of numbers coming in from L&T. A 24% top-line growth is what the company has seen this time around. The net profits, 2,042 crores. So that compares to 1,500 crores same time last year.
About 37% higher.
Yeah, 37% higher.
Jump in profits.
Yes, so these are good numbers coming in. Amit Mahavar, who tracks the stock closely, joins us now. He's from Edelweiss. Amit, hi, good evening. First, I want to ask you about the order book, because that was a primary concern, right? That in Q3 there would be a slowdown in orders. It's come in at 42,233 crores. How would you react to this?
Yeah, so I think order intake is, though on a YOY basis, it is down on a high base. But I would believe the absolute number of 400 billion INR plus should be seen as a positive. And this is a control order intake. So the core EC business will be a lower number, but nevertheless, it seems like, a decent set of order intake.
Okay, so the order intake is decent. What about the numbers on the whole? This 24% revenue growth at 32,850 crores, it's better than what we were estimating. Even profits have gone up almost 37%. How would you react to that?
So broadly, in terms of top-line growth, it's more than a 5% beat versus consensus, and it's implying a 24% revenue growth, which is a very strong number. And if you see the profitability also at around 11.2% EBITDA margins, is broadly in line. So I would say that a strong set of P&L for Larsen.
Okay, so strong set of P&L. The order book is also looking pretty good compared to at least what the street was expecting. And even the EBITDA number is much higher than what we were estimating. So we were expecting the EBITDA to come in at 3,680 crores. It's come in at almost 4,000 crores, 3,990 odd crores. What would your recommendation be on the stock? Because in January, the stock was down almost 10%. There were some fears about a slowdown in orders, etc. Would you expect the stock to recover on Monday?
Difficult to comment on near term, but this is our industrial topic, from a medium to long term view. And in the tough environment, when I say, December and March quarter, which is expected to be slightly lower, these kind of results are very strong, on core operating numbers. On all the headline numbers, there's a beat. So, of course, it has to be a positive response by investor community. And I believe, more importantly, the management initiative, are clear differentiators here. I don't think most of the other industrial names will, match to these kind of growth. So that way, it's a clear outperformance from the company.
Okay, we are getting some more details on the the segment-wise performance. The infra business, this was expected actually. The infra business EBIT was expected to slow down, and it has to 4.2% versus 6.6%. But I believe that the street might ignore that because the order inflow is pretty strong. Remember, in Q1, the order inflow was around 36,100 odd crores. In Q2, it was 42,000 crores, and now it's 42,233 odd crores. So looking pretty good as far as orders are concerned. Ranjit Sivaram also, who is the capital goods analyst at ICICI Securities, is with us. Ranjit, good afternoon. What's your own view on how the numbers are looking this time, and more importantly, the order inflow?
Order inflow is definitely better than expectation, given the orders they have announced. I think it was around 25,000 crores they've announced. And so the main thing which we have to look is that whether there is any change in the guidance. If there is no change in the guidance, I think that should be positive for the overall outlook.
Okay, well, as of now, I don't think there is any change in guidance. There was this fear, right, that there would be a cut down in their order inflow guidance from 10 to 12%. Some were even talking about 0 to 2%. As of now, I don't see any of that play out. I don't know what the management might say later on. But what's your view on which way the stock could move? Because this looks like a beat on almost all fronts. You expect the stock to recover on Monday?
We have to wait for the management commentary regarding the is there any alternative for the buyback announcement. That was something which markets were not that happy about. And regarding that, the Schneider acquisition, so what is the status on these two fronts? If the management can able to provide some more clarity, that will be something which everybody will be looking at. That's one of the reasons the stocks also did not perform much.
So all of that, of course, we'll get to know when the management speaks. But for now, just based on these numbers, we are seeing a bit of trepidation in the infra business. Also, the power segment continues to witness muted prospects, they say, because of limited opportunities in the face of overcapacity in the sector. So, you know, there are some chinks in the armor. Infra business margins have slowed down a bit. Would any of that worry you? Or do you think, based on the healthy growth that we've seen in the P&L this quarter and the orders of 42,233 crores, you think the stock would move on Monday?
Fundamentally, it seems like everything is falling into place. Apart from the corporate action regarding this buyback, I think there will be a lot of people who will be hearing something as a additional dividend or something from the management in that. Apart from that, fundamentally, it looks like a good set of numbers.
Okay, well, gentlemen, thanks a lot for joining us. So just to summarize for those who have joined in late, L&T has delivered a strong set of numbers this time around. The revenues have gone up by 24%. The margins are stable at 11.2%. The profits have gone up by 37%. More importantly, the orders for Q3 have come in at 42,233 crores, much better than the street estimates. And no, for now, at least, they have not cut any guidance. They hold on to it. Let's see what the management has to say. But I expect the stock to do well on Monday.
All right, Sonia, thank you very much for taking us through all of those details for L&T's third quarter performance, which beat street estimates. But for now, we'll take a short break on the show. But when we return, we'll bring you more news and updates after this short break. Welcome back. It's still with After the Bell. Now, Kailash Satyarthi has dedicated his life's work to the improvement of the lives of millions of children. At a packed house in Davos, Shireen Khan spoke to the Nobel laureate about his work, his film The Price of Free, and the globalization of compassion. Here's an excerpt of that conversation.
The theme in Davos this year is Globalization 4.0, Mr. Satyarthi. And we talk about technology, and we talk about trade, and we talk about trade negotiations and investment, but nobody talks about the globalization of compassion, and that is what you've spent your life working on. Why is it that that message doesn't go through?
Thank you. Thank you, everyone, first of all, for all your love and respect for me. We have seen the results of globalization of markets, technology, economies, and knowledge, of course. And we have seen the results in both ways. We have seen the flip side of it, and we have seen some advantages of it. But I feel that if 152 million children are still working at the cost of their childhood and freedom and education, we cannot call ourselves cultured and civilized, advanced in any manner. Even if one single child is in danger, world cannot call itself that this is a safe planet. So I started thinking that let us globalize compassion. We have globalized everything. I'm not talking about sympathy or empathy. Sympathy is the outermost circle, empathy is a little bit inner. But when we talk of compassion, it is a feeling for the suffering of others as it is your own suffering, and then a drive to change that situation of suffering, and that becomes compassion. And I strongly feel that all religions in the world were born out of compassion of some people. May it be Jesus, may it be Buddha, may it be Gandhi, may it be Hazrat Muhammad. They were compassionate. Similarly, the revolutions and changes also born of compassion. When some people felt that Mao felt, or Lenin felt, or Marx felt that something is going wrong in the society, that was the spark of compassion. So we have globalized everything. Now, time to globalize compassion, because compassion is the most precious gift of God, which we all have inside us. But we don't recognize it, we don't acknowledge it, we don't respect it, and we think that there are drops of waters, but it's not true. It's an ocean which is inside each one of us. So my effort by doing all this work is to ensure that let us globalize compassion.
You know, you talk about globalization of compassion, and a lot of progress has been made. This film is an indication of the ground that has been covered so far. But as you look at the world today, and there is a sense that political leaders especially are starting to look more inwards, insular, there is protection, there's this sense of nationalism at the exclusion of others. In that context, do you worry about being able to take this story forward, being able to achieve the goals set out, by the UN, etc., eradication of child labor by 2030? And I'll link this to what we're seeing on the healthcare side as well, where a lot of the change and the progress has been made on account of development assistance from developed countries. Do you fear that we are going to see less of that as we move forward?
I don't fear, but I'm definitely concerned. I'm concerned seeing the trends as well as the political and economic situation where the children do not gain that priority in the development agenda, in political agenda or economic agenda. So that is a matter of concern. That world is not investing enough, in fact, on education for children or well-being of children. When we talk of education, $22 billion additional money is needed to ensure primary education for all children.
That's it?
That's it, $22 billion annually. And what is this $22 billion? That is 4.5 days of global military expenditure. So I'm just bringing that comparison, that what is the priority of the world? The education of our children, which can open up the future, which can open up the windows of all the opportunities, which can act as assurance for all human rights and dignity and justice and equality, education.
We'll get you more news and updates on the other side.